Let's discuss breaker blocks and the unicorn model. Firstly, so what is a breaker block? Okay, for a bullish breaker block, this will be mega structure pattern where price creates a high. For bearish breaker block, that is, price creates a high, then we have a run on that high and price breaks below the short-term low prior to the run on the buy side liquidity. So price creates a high, then creates a short-term low, we run that high, and then when we break below this low here, the last down candle in this range of price is our bearish breaker block, and price is going to return to that and sell from there. Now the unicorn setup is when we have that breaker block in alignment with the fair value gap, with the bearish fair value gap. Okay, so there should be an overlap of a fair value gap within that breaker block. So the breaker block will be in this range of price. Here the lowest down candle before price ran the high, and the fair value gap will be on this market structure shift leg right here. Okay, and so when you pair this together, ICT said it is the unicorn model or setup, and it is one of the greatest algorithmic entry patterns you can have in price. And so definitely you want to be a seller here, okay, because it's a high probability sell area. And then for a bullish breaker block, you're gonna have a low and then short-term high, and then price is gonna run the low, okay, the liquidity below this low, and then when price breaks above the short-term high, the last up candlestick in this range is our bullish breaker block. And then for the unicorn setup, you want to have that bullish breaker block overlapping with the fair value gap, with the bullish fair value gap. When those two are paired together, that is a high probability area to buy from, and it's called the unicorn model. We have a low, a high, and a lower low, then price closes above this last up candle, the short-term high here, and so the last up candle in this range is your bullish breaker block, and here price closes above this area, and so price will return to that and buy from there. Another example, we have a high, a low, then a higher high, and then when price closes below here with the body, then price will return to that and sell from there, return to that and sell from there. Let's dive deeper into the unicorn model. Okay, now let's see some rules for the unicorn model. For every high probability trade setup that we can take, first and foremost, most important thing is always going to be your high time frame narrative. So that's going to be the first thing. Okay, what does price tell you, and what is it hinting at as to where it's gonna go, or where's the likely next draw or direction. And the second thing which you want to do is you want to check your intermediate term perspective. So what you're gonna do is you're gonna check your intermediate term PD arrays if they support your narrative. Okay, and the third thing is going to take your entry on the 50-minute time frame or lower. And the fourth thing, you're gonna target your opposing liquidity. Now we're gonna look at some examples with current price action. So what you're gonna see is we had price taking out the significant high here, which is the buy side liquidity. And so if you've already watched the video on narrative and bias, you already know that what you expect after price takes out liquidity is that we expect to see price retrace it back inside the range. Okay, now let's dive lower and see what form on there. So obviously what you're gonna do is we're usually gonna jump from the daily to the hourly time frame. Okay, now price after taking out the buy side liquidity, you're gonna notice the last down candle before we take out that liquidity is gonna be this candlestick over here. And obviously you see how the way that it acted as support even here before actually becoming a breaker block. And obviously when price closed here with the full body with the body, and then price went after it, and so from there and came back again here inside that breaker block, and so from there. All right, and of course if you notice, you realize that it's actually a 1 hour unicorn setup with the breaker block overlapping with the breaker in a fair value gap. So on the hourly time frame, this will be where we get our intermediate time perspective from. And then of course we followed on to the third step. We take our entry on the 50-minute time frame or lower. Okay, now let's see here on the reaction on that, if there might have been a setup for us to take the 15-minute time frame, nothing there. But on the 5-minute, you're gonna notice something. All right there at the hourly break block, we have price coming up, create a high, low, then higher high, and then we break below that. So the last down candle on that range will be a bearish breaker block. So price closes below that breaker block here with a full body candle, and on this candlestick we trace up to there, and so from there you take your entry on this time frame on this 5-minute breaker block and target the opposing liquidity. In this particular case will be this low here, right? Okay, now let's look at another example. I'm going to take it from the daily here, right? So we bought here a couple of things. We had a look, we anticipated price actually finding support on this inversion family gap, but of course at this point you understand that it was also at the mean threshold of the bullish order block right there, and also this low here. Okay, it's a significant low. It's a previous daily low here, but you see how price created a low, then a high, then low, then higher high, right? So it's like just a significant liquidity swing point here, which is marking out, which is happens to be in the same area as all the other confluences. Let's dive into the hourly time frame. So what you see is price creates a lower high, then you take out the significant liquidity pool here and we break above it, right? So that means this last up candlestick here is our bullish breaker block. Okay, now on the hourly time frame, obviously you see that price installate this inversion favor gap. You see the price actually did now return to this bullish breaker block, right? Or the hourly breaker block. But let's dive into lower time frame, say the 15-minute time frame. You see how it looks like, and right over there, when price closes above it with the body close, see the price return to it actually and bought from there. And on the 15-minute time frame, obviously that area there's an overlap with the favor gap, so that means there's a unicorn setup number 2. If you're still not convinced, I can show you on the 5-minute time frame. Price closes above, returns to the breaker block, goes up again, returns to the order block, boom, buys from there. Now of course this doesn't mean that we could have anticipated the price is going to be aggressively buy from there without any kind of retracements, but nevertheless the breaker block was utilized by price. Let's look at another example back on the daily. Here the sell going down, okay, price hold from this daily rejection block here, but I can show you on the 4-hourly time frame the intermediate time structure on that actually was a bearish breaker block the price hold from, right? And so let's look at the hourly time frame on that. And before price, the last down candle before price you know, have a last run high will be this one here, and that's our bearish breaker block, okay, utilized by price. You see here when price closes below, it turns to it, and so from there if you look to your left, we have this relatively called lows. Let's go on the lower time frame over here and see how we could have formed our sell setup from there. So on the 15-minute time frame, what do you see here? So see price actually closes below that down candlestick, so that confirms it as a breaker block, and eventually price returns to it and it sells from there. What do you see here? Well, I see a high, a low, then higher high, and then we have a closer below that. That means we have a nested 15-minute 15-minute breaker block within that hourly breaker block. But on this 50-minute, it's actually a unicorn model. You take a step from here, you target the relatively called lows from the hourly time frame. The next example and final example will be this low here, okay? And so the narrative is price to God sell side liquidity, so we expect it to retrace back inside the range. And so yeah, I should probably also tell you a little trick that I learned. So basically what you want to see, you always want to look at price in terms of buy side of the curve, sell side of the curve. that's the framework for market maker buyer models. I mean market maker models really. Okay, so what you see is most of the time high probability setups are going to occur where price reverses from. Okay, that's always going to be our interest. So you see how here when price is buying, bullish period is being respected. There, when price is selling, bearish period is being respected. So bullish order flow, bearish order flow, right? But if I take you to the left, you realize we also here price is bearish, so that's bearish. I mean that's like the sell side of the curve and buy side of the curve, right? Take it to your left again, you see how in this area here, in this price section, price was buying, bullish period is being respected, and then boom, you have a reversal, and then so from bullish order flow, bearish order flow, bullish order flow, bearish order flow, right? So all the time there's always going to be two sides to price, or two sides to price actions. You're going to see you're either on the buy side or the sell side of the curve until we reach a high time frame period rate or level of interest, and that's when we can have a shift in the order flow. All right, and so you're also going to realize that breaker blocks usually form at reversal points, and those are like the highest probability ones. So if you want to have a high probability breaker block, look for it at reversal points, and not within a range but at the external range, high or low. Alright, as opposed to seeing this and saying that is a bullish breaker block right here. You see this? This forms within a range. Alright, it doesn't make sense to be saying that this is a bullish breaker block and looking to buy from here. Now for the final example, alright, you see lower lows, lower high, lower lows, no, but not. So the final one, or the final, before we create the lowest low, we have a low here, then a high, then a lower low. All right, and this will be a bullish breaker block right here, and see price actually closed below it, but actually buys from there. And let's refine that using going on the 50-minute time frame. You realize there's more details on this time frame. So here we have a final sweep of a low, and then price goes higher, so we can refine that to a 15-minute breaker block. And yeah, price pretty much came close to taking out this low, but it did not. Okay, now I want you to really pay attention from now. What do you see? When price finds support here and starts going up, right, same thing I've been talking about: buy side of the curve, sell side of the curve, buy side of the curve, sell side of the curve, buy side of the curve. Right, what do you notice here? When price changes or shift from buy side buy side delivery, I mean sell side delivery to buy side delivery, low high, lower low, then we close above this up candle right over there, and lo and behold, this is actually a unicorn setup. This is what we want to see. This is where we want to take our entry from. Now if we take an entry on the unicorn model, you target the opposing liquidity, right? And so that means we'll take our exit on this high here. Eventually we reach it, right? When price broke away from this bullish breaker block here, right, it was here, right, and it started to break away to reach our target over there. What do you notice again? Sell side of the curve, buy side of the curve. And what do you see? Low, high, lower, low, and finally we break above. We close above here eventually, right here with this candlestick over here. Okay, we'll try to make this as precise as possible. All right, and so that means this is our bullish breaker block, and what do you see? It's actually overlapping with a fair value gap. So that's a unicorn model. All right, I can still go on. Even on this one too, what do you see? It's here low, high, and lower low, and we start to seek higher prices, right? That means this up candlestick here, the highest up candlestick before we take out the sell side liquidity, is our bullish breaker, and boom, price finds support on that. What do you notice? Also, there's a fair value gap nesting within that bullish breaker. So what do you see? Price finds support at breaker block, unicorn model, unicorn model, unicorn model. And so I hope this was insightful. Until the next one.